What's up, everyone? Welcome to the Social Investing Network. I'm Nicole Casperson with my co-hosts Delana Saparu and Zaid Admani. What's up, guys? How are you feeling today?
Feeling good, feeling good. What's up, Nicole? What's up, Delana? We got a great show today, covering a couple stories and a guest. First story, Bitcoin is coming to your 401k. Fidelity is making it happen. We're going to discuss what that means. And then Nike is selling virtual shoes for like 4 figures, guys. And they're popular. So someone explain this to me. We're going to talk about that. Delano.
Yes, they are very popular. And today we get a chance to talk to the leading provider of digital asset research in Joshua Frank. And he's going to tell us a little bit about what he hopes to see in crypto's future. So stick with us and make sure you like, subscribe, hit the notification bell. Now let's get into it.
All right, starting it off with Joshua. We have a very special guest on today, Joshua Frank. He's joining us from Crypto Bahamas. Looking nice, man, looking tan. Joshua is the co-founder and CEO of The Tie, which is a leading provider of digital asset research to hedge funds, research firms, trading platforms, you name it. Josh, man, I appreciate you being on the show today.
Thanks for having me. I look great, a little frozen there, so I apologize, guys. The Bahamian Wi-Fi's got me.
No, I think it looked good. They're making it work, man. I just appreciate you taking the time away from all the fun there. So we're going to get into that in a bit, but I want to talk to you about The Tie. First of all, like, how did you come up with the name, and what inspired you to create the company?
Yeah, I mean, the name is not necessarily it's kind of a long story. I basically couldn't come up with a name, and somebody suggested the Trusted Information Exchange, and I was like, who is going to trust a company with the name Trusted in their name? Anyways, we went to register the name of the company, and apparently there's some securities and other laws in the US where you can't use the word trusted or exchange in your name. So we just became The Tie, but I guess you can say we're tying data and information together. But basically the impetus or the idea behind the company, or what the company has kind of become over the last few years, is really the fact that if you went out to hedge funds, institutions in crypto, and you asked 10 different hedge funds how they stayed on top of the market, every single one of them gave you a totally different answer, right? Mm-hmm. Everyone says they waste their entire life on Twitter and Discord and Telegram, but the other tools and technologies and pieces of information that they're looking at, all differ. And so today, I know you guys mentioned research. That's certainly a piece of what we have, but we're actually the leading workflow solution for institutions, or data terminal. So we have a data platform that has everything from market data to derivatives data to news to sentiment data to on-chain data to research, really, anything that an institution needs to see. And so our clients are the largest funds in the entire world, and they're traders, analysts, PMs, CIOs are spending 2, 4, 8 hours of their day, basically staying on top of the market in a singular interface instead of going to 50 different websites.
When I first heard about your product, I was doing some research yesterday, and I'm like, does this guy just make like a Twitter copycat here? He just be scrolling through Twitter on the platform. But like you mentioned, you're not just tying in Twitter, but you got Telegram, you got Discord. I mean, there's a lot of information.
Twitter what we do from Twitter isn't actually showing you raw tweets. It's showing you aggregated, quantified investor emotion. So, for example, how many tweets are there in a particular day about a particular asset? What is the percentage of those that are positive or negative? How many unique accounts is that coming for? What are the, how does that diverge versus average? But we're looking at everything from an on and off chain perspective. So, for example, we can help you understand what's actually going on the blockchain. So from like an Ethereum perspective, we can show you which smart contracts are the hottest. So, for example, There was a big hack about 2 weeks ago, and we found that Tornado Cash was the hottest contract, which was people trying to launder money after it was hacked, right? And so we have all that data. We track news in real time. So we track SEC filings, court cases, regulatory rulings, but really anything the most sophisticated investors need to see in a single interface.
That's awesome. Yeah, it sounds like a really cool product. Actually, I think eToro even offers it. So that's really cool. Definitely have to make your own decisions based on your investment needs, but it's really cool that you're offering this. It kind of sounds like the Bloomberg of crypto. I think that's what I heard being thrown around, the Bloomberg of crypto. How do you think you differentiate from the traditional financial information sources like Bloomberg?
Yeah, so in terms of eToro, actually, there's a copy portfolio we built a few years ago using one of the data sets, a sentiment one, and that's certainly available on the platform. It rebalances every month or so using investor sentiment data, which makes sense given that eToro is the leading social investing platform. How do we differentiate versus traditional financial information sources? It's a good question. And the data is very different, right? And so, a lot of it's the same, right? Mm-hmm. Market data means pricing data, pricing and volume and stuff like that. That data is all similar. Derivatives data, which is like, futures and options data. A lot of that is the same. News is the same, but it's really taking, what we focus on is taking things that are crypto native, but making them feel digestible to traditional investors. So for example, when we think about news in crypto, we think about how does news, kind of look like corporate actions in the traditional capital markets, in traditional capital markets. So corporate action would be things like a dividend, a stock split, things like that. For us, a dividend isn't too dissimilar to a hard fork, right? And a stock split is, like a token burn, right? And so there's similar ideas. There's similar ideas here, right? But in terms of how we differentiate from a traditional, we're crypto, right? So everything we do is crypto native, running blockchain data, stuff like that. Happy to go into it in more depth, but trying to keep it more high level as opposed to getting into the complexities of differences.
No, I like it. It's very crypto native. I like that. I think there's one thing that you said that's very interesting to me is the sentiment analysis. How do you go about doing that? Is it like a bot that's like you have an algorithm that's kind of going through Twitter and Discord and all these places to figure out what the sentiment is of a particular asset?
Yeah, so we have we have a number of different sources of sentiment. So with Twitter, we actually have the full API, so the full fire hose of data. We also look at TikTok data actually now. I think we're the first company ever to do that.
Nice.
We look at YouTube data, Reddit. We now look at 4chan data. The way that we kind of go about scoring sentiment is we ingest all of that data. In the case of Twitter, we ingest 1 billion tweets a day just from Twitter. That's just the raw data we take every day from Twitter. And what we have to do, the first step and the most important step, is to actually assess whether or not that information is relevant to a particular asset. And that may sound simple, but it really isn't. Right. Take, for example, IOTA. IOTA is a cryptocurrency, but every sorority has the name. There's Kappa Alpha Iota, Theta Iota, Mu, all these random sorority names, right? And so there are all sorts of different issues. Like ETH was Ethereum, but it was the ticker of Ethan Allen until they changed it, right? And so you have all these avalanches of crypto, but it's a generic word. You could have an avalanche in Colorado, right, and that could be being talked about on Twitter. So our first step is actually to assess whether or not the information is relevant to a particular asset. The next step is to try to identify whether or not the account producing that particular, you're sharing their belief or their insight is actually a real account. One of the biggest challenges in crypto is bot activity, right? And in some cases, 90 to 95% of messages on a particular asset can be coming from bots. And so there's about a 14-step process that we have. And we basically have a proprietary natural language processor, and we score every single word in every tweet individually or every message individually. So for example, if we see a message, Bitcoin to see surge in OTC trading volume after, we're in the Bahamas, the governor of the Bahamas announces that they're buying $1 billion. Let's just say that hypothetically happened. We'd score the word surge and buying positively. And what we do is we basically score every word in every message. And what we do is we normalize all the data on a per asset basis, which means we compare data on Bitcoin, for example, over the last hour versus the previous 24 hours. Because, for example, if you tried to compare how positive or negative investors were on Bitcoin to Dogecoin, that's really misleading because everyone's always going to be more positive on Dogecoin than they are on Bitcoin. And so what you do is you try to normalize the data on a per asset basis. So it's our investors becoming increasingly more positive or increasingly more negative about a particular asset.
Man, that's a very, very good answer. I appreciate you kind of going into the details there because I've always wondered how these sentiment analysis are generated. So that was a great answer. You really nailed your pitch there. I was looking through your website, and it's a great website. I highly recommend people check it out. And you had something on there, a really great chart about correlation and causation. And you had a great example was the Nicolas Cage films versus the number of people who drowned in a pool, which I didn't know this was a thing, but now I'm like suspicious about it. We have a chart right there. Actually, we're showing up on the feed. So obviously, not all correlation equals
I haven't
causation.
even seen that. Somebody must have produced that research.
Oh, whoever did, give him a shout because it's really good. So obviously, not all correlation equals causation. So my question is like, how do you know when correlation does in fact equal causation, and you can start generating data and providing guidance because of it? Like, how do you what processes do you guys do, or what do you guys look at?
To be honest, I hire a ton of PhDs in math from the top universities in the US, and I let them figure that out. That's part of how I do it, right? Is I hire people that are way smarter than I am. But it's a hard question, right? And so, a lot of what we'll look at, for example, when trying to look at correlation versus causation is the fact that when you try to look at whether or not a data point moved a particular asset, one thing that you have to understand is how correlated assets are to one another. So for example, there could have been a news story that Algorand did something, right? And then Algorand goes up 7%. But if the rest of the market goes up 9%, that story probably didn't cause Algorand to go up 7%. The rest of the market caused the asset to go up 7%. And so a lot of what we look at is measures of dominance, right? So I'm sure some of your audience may have heard of Bitcoin dominance, which is the percentage of market cap that Bitcoin accounts for. But in our case, we look at things like trading volume dominance, or social volume dominance, or on-chain dominance, or news volume dominance. So what percentage of a particular thing does that asset account for? And so when we see a particular piece of information, does a metric as compared to the rest of the market change significantly? And that's a really good way to start addressing the question.
No, that's awesome. That's awesome. And again, just to keep the lawyers off my back, I want to make sure that this is not investment advice. We're just people need to make their own decisions based on their investment theses. But we're just kind of having a conversation here. I'm gonna wrap with this question. I want to thank you again for taking the time. I'm gonna wrap with this question. You're in the space now. You're deep in the space. What is something that you're excited about in the future of crypto that the general public, who's maybe just a general viewer, may not be so hip on?
Something I'm excited about that the general public may not be so hip on. Probably not the most exciting thing to the general public, but I'm very, very excited for industry consolidation and M&A. So I think there's going to be a ton of, we're a picks and shovels infrastructure business for institutions, right? That means we build the shit you guys are never going to see, you're never going to look at, right? We're building the infrastructure, the platform that institutions are building on top of. And so from an infrastructure perspective, you have things like custody. A custodian is like your bank. They hold your assets. You have prime brokerage, you have prime services. So trading and lending and other things for institutions. And I think, within, I'm not suggesting that with what we have, but across the board, I think there's going to be a lot of consolidation. I think a lot of companies are going to be buying other companies and merging together. And I think it's a really exciting time to be obviously we're just institutional, but from a consumer perspective in crypto, there's a ton of competition now, which is great because as a consumer, you're going to be, platforms are going to be forced to build the best products and services, right, which is awesome.
Absolutely. You're absolutely right. A lot of great competition, a lot of people building great stuff. Hey man, I really appreciate you. Thanks again for coming on, taking the time from the Bahamas. Go enjoy that sun out there. Go have some fun, and hopefully we'll get to talk to you again soon.
Yeah, thanks for having me on. I appreciate it.
All right, thank you. Bye. All right, welcome back, guys.
Good to be back. That was a good interview with Joshua. I loved it.
He's a really interesting guy. I think a lot of people got a lot from that. It was awesome.
Let's dive into our first headline of the day. So, retire on crypto. Guys, Fidelity, the nation's largest retirement plan provider, is going to allow 401k savers to put Bitcoin in their retirement plan. So this option is scheduled to come later this year and will only be adopted into a plan if the employer opts in. And according to the Wall Street Journal, fees on these investments will range between 0.75% to around 0.9% plus trading fees. So this, I believe, is huge news. One of the reasons why I don't have cryptocurrency in my IRAs is because of it's really hard to. No large institution really allows that right now. Obviously, Fidelity is jumping into that fray. And I personally think it would be if it's a lot easier to do, a lot more people would adopt it. So Zaid, what do you think about this Fidelity jumping in to allowing Bitcoin into 401ks?
I think it's a great move as far as more mainstream adoption of crypto, right? I mean, we're starting to see a very legacy institution like Fidelity adopt this. I think it's going to get more boomers to maybe take crypto more seriously, because it's Fidelity, and more than 20,000 employers use Fidelity for their retirement accounts. Yeah. So I think it's great for widespread adoption of crypto. I'm not so sure as far as if crypto is the best investment especially for older people that are getting close to retirement age. If you're getting close to retirement, investing in a very highly volatile asset like crypto might not be the best move. But for the people that are starting off their careers and have a Fidelity a 401k plan, it gives them an opportunity to invest. And Bitcoin is one of those, if you're really bullish on Bitcoin long term, this could give you the tax benefits of investing in it too. So that's awesome.
Yeah, the allocations are definitely larger than expected. Employees will be able to transfer up to 20% of their balance into Bitcoin holding accounts, or divert up to 20% of their paycheck contributions there going forward. So a little high in my opinion, though not an expert and at investment advice. But most experts in the space, folks like Rick Edelman, who work with financial advisors regularly on educating them on crypto, someone like him will say, closer to like 6 or 7%, dabble it in, sprinkle it around some crypto, but these are retirement portfolios, so it could be very different. Although proponents say that adding some crypto into a retirement portfolio can counter losses in traditional holdings and even act as an inflation hedge. So we'll see how it pans out. I will say the U.S. Labor Department urged employers to be cautious about adding crypto to 401k plans. They did that just last month. So it's still, I think, a very uncertain kind of landscape right now. But Fidelity has always been ahead of the curve in this. They started their digital asset crew over there way before things started popping off.
Exactly.
So if anyone's going to kind of help bridge the gap there a little bit, I think Fidelity can get that one done.
I wonder if this could be a potential way for employers for recruiting, right? It's like, hey, we have Fidelity, and then we allow Fidelity to you can invest to 20% of your 401k in crypto. So if you're like choosing between two companies and one company allows this, I mean, that could be a way to recruit younger talent as well.
That's a good point, because I think if you poll a lot of people, the biggest complaint they'd have about the 401k plan is the lack of options, right? You get like 10 to 15 stale indexes. And now you're adding an option that's obviously, as we mentioned, speculative, but people want sometimes diversification. You don't have to put all of your, your assets in Bitcoin. You don't have to put all your assets in some sort of index. You can diversify it. And that would be a big advantage to, I believe, potentially to employers that are offering that.
Yeah, absolutely. Great point.
Yeah, there's a lot of interesting fintech companies out there too that are working on things like this. So I think the mix of like newer startups and fintech companies offering things like diversification in 401k plans for retail investors and everyday people is awesome. Seeing it happen with Fidelity is also amazing. So we'll see how it works out. Nike's crypto is kicking off with selling shoes for $8,000. Last December, the athletic wear company bought Artifact, a virtual sneaker designer, in the hopes of planting its foot squarely in the metaverse. Over the weekend, Artifact and Nike dropped the Nike Dunk Genesis CryptoKicks, a collection of 20,000 NFT sneakers. Since the virtual sneakers launch, crypto punters have been buying them for between $7,500 and $9,000. So that's pretty crazy. It's a simple and interesting concept where you purchase two NFTs. One is a shoe and the other is a vial. The shoes are basically blank, and when you add the vial, the skin over the shoe changes depending on what is in your vial. And just like in the real world, the metaverse lets you change them as many times as your heart desires, or actually more like as many times as your ETH wallet allows. So really interesting. I know we're here as like a crew of not sneakerheads, but at the end of the day, it's fashion, it's dematerialization. I think we're moving in that realm. I've tried to think of it like, my mom spends that level of money on, a Chanel bag or whatever. So people are gonna, they want to create content with the sneakers and they want to, be a part of the metaverse. So crazy though.
Very crazy. Like we're all non-sneakerheads here, but I actually think this is really cool for a few reasons. I think one, you see that there's a premium being paid for this because as we move, as you mentioned, towards like a digital augmented reality world, the flexing is going to be done through like amazing shoes, through cool brands, through things like this. And, someone that doesn't spend a lot on stuff in real life, like I would be tempted to do something like that in here. I looked at the skins and the different things they had. I think it's really, really incredible. It's cool. I just think it's like a really cool look. I love the way they looked. And they did mention the fine print that if you use a vial that's potentially owned by a third party, which is kind of interesting as well. But I thought this was interesting, Zaid.
Man, Nike always comes up with ways to make a lot of money. This is crazy. Again, I'm not a sneakerhead, so I don't get it. But it's one thing for Nike to sell actual shoes for, a few $100 to $1,000. I get it. now they're selling virtual stuff that they can literally make more of. I mean, like this is brilliant, man. This is brilliant. Not again, no hate. It's not for me. You
You don't want to wear $8,000 Nike shoes.
I do not.
Augmented reality in the virtual world.
That's not my way of flexing. But again, I can definitely see why people want to do it that way, right? Like it's just a way of flexing, right? Clothes are a way that we flex to society, and when we want to flex to people in the metaverse, we're gonna need clothes as well. So this makes a lot of sense. Just a brilliant business, I gotta say. And I'm sure just like with the actual sneaker market, which has a huge secondary market, right? There's a lot of websites out there now that sell used sneakers or sneakers in the secondary market. I think that market's worth like over $6 billion.
Yeah.
I think I read that on Business Insider.
Wow.
So I'm sure there's going to be like a secondary market for these sneaker NFTs. Obviously, we already know how big the NFT market is, but just like the particular sneaker NFTs, it's probably going to also be big. So, man, it's crazy. And shout out to Nike for innovating in the space.
Yeah.
Well, all right, guys. Let's wrap up with 3 stories that caught our attention. Nicole, what was your story for today?
The Great Resignation continues on for women, according to a study by Deloitte's Women at Work 2022 Global Outlook. 5,000 women in the workplace across 10 countries made it clear that the disruption caused by the pandemic, as well as the shifts to the new normal of work, are taking a heavy toll on women and their mental health. More women are likely to be looking for a new role than they were a year ago, which is kind of surprising, right? And burnout is the top driving factor. Nearly 40% of women are actively looking for a new employer, and they cited burnout as the main reason. So I do think that there's a lot of room in the workplace to still be more flexible. Women carried the largest burden and the brunt from the pandemic and work from home situations. So I think we all workplace cultures could do a little bit better to be more flexible to women and their needs.
Yeah, 100%. Our next story that I thought was interesting, and hopefully these people get some reprieve from it, but Robinhood has announced layoffs. The gamification trading app is letting about 9% of their full-time employees go, stating that its hiring spree last year led to duplicate roles and job functions. Robinhood stock is down more than 71% since it went public last summer. Obviously not great news for people, and hope everyone finds reprieve from that. But it's interesting to see, a company that's embattled that IPO that's letting people go because they kind of overhired during that time. During this crazy trading time.
I want to know if Robinhood ever hired that head of education or whatever officer that they promised they would. I don't actually know if that's ever
a good point.
happened.
I don't remember that.
Would love to see if they double hired for that one, but anyways.
Yeah, I actually know someone who got hired. One of my followers, he DM'd me saying he got hired from Robinhood like a year ago, and then he got laid off, unfortunately.
Dang.
So hopefully they bounce back on their feet. It's a hot job market, so I'm hoping, and fingers crossed, they all bounce back quick. All right, I got the last story. Bill Hwang, the owner of Archegos Capital, who famously lost $20 billion over 2 days last year, is now being arrested for securities fraud. Guys, I can't wait for the Netflix documentary on this story. Story keeps getting crazier and crazier. I mean, I don't even know what to say. I mean, the story just broke this morning. There's more details to come soon. But yeah, Bill Hwang arrested.
Wasn't there a lot of banks tied in with them?
There was, there was a couple of banks that lost like billions of dollars because they gave this guy let this guy borrow so much money, and then oh my god, and this story is just nuts. Obviously, when the story broke last year, when he lost that much money in a short amount of time, everyone was like, "What's going on?" Now it's taking a turn. So crazy Netflix documentary coming soon, hopefully, about this.
Oh man, crazy. Well, that does it for our show today, guys. Thank you so much for tuning in. Be sure to like, comment, subscribe, hit that notification bell. We'll see you tomorrow.
Peace.
We out.
Bye. Hey guys, thanks so much for tuning in. Be sure to like, comment, and subscribe, and hit that notification bell. We'll see you tomorrow.